Okay, let's get you some analysis on the Fed decision and what's going on in the markets. Axel Merk is here. He's president of Merk Investments, joining us live from San Francisco. Axel, always a pleasure. Welcome back. Let's talk about how the market reacted to this Fed decision, because I thought this was particularly interesting. Do you think the sell-off into the close was based on that Fed decision, or are there other factors at play?
Well, we always like to correlate the market moves with some news in the markets. Let's keep in mind that rate hike expectations had gradually been rising in recent days, and there wasn't terribly much news. I can give some flavor on some nuances, but ultimately we had some volatility immediately surrounding the Fed announcement. Yes, at the end of the day, the market did sell off, but that could have happened either way, right? With hindsight, we can say, oh, maybe there was something more hawkish or not. I would just say there was a correlation, not necessarily a causation here.
And when you get into the weeds of the announcement, the word accommodative has been removed. What does that signal to you, Axel?
Well, Chair Powell made it very clear that it was simply a matter of the word having to leave because it's outlived its purpose, but policy is still accommodative. And I tend to agree there with the Federal Reserve there. Even though we are now at over 2% at the federal funds rate, it is still an accommodative rate. And and that's now my take on that, if you put that into perspective, we have an economy in the U.S. that's running very well, unemployment is very low, fiscal stimulus is in place, and yet we still have an accommodative policy. So we're still steaming ahead. Now, obviously, the foot has been gradually taken off the accelerator, but this is one area where I disagree with Powell. He says everything is steady, and indeed he was asked whether things are too good to be true. He nodded on that. I tend to dig into that and say, I think the risk of an overheating economy is quite significant. They do have to continue hiking rates. My own take is they'll hike more than is currently priced into the market. And sure, you can read that sell-off in the market and that maybe some others agreeing with it, but I think that's reading a little bit too much into it, because rate hike expectations did not change much in the aftermath of the Fed announcement.